The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour on this 20th day of June, summer solstice. Wow. Something's wrong with this picture. They should move the longest day of the year to like August or something like that. Surely, I mean, come on, the legislate everything. They should just legislate longest day is August. Come on. It's downhill from here. Anyway, beautiful weather we've had here in the Boston area. The Dow's up 232 at 17,908, 232. You say, how did that happen? We'll discuss that in a moment. S&P's up 25 at 2,096. The comp index is up 79 at 48.79. The VIX is plummeted. Remember, it was 22 last week. It's under 17 right now, 16.90s. Big move down of volatility index, that is. You've got gold. This is going to be very interesting. Gold is down 6 at 12.88. And silver's actually up a little bit, 0.09 at 17.51. We'll talk about that in a moment as we go through the charts. Platinum's up. High-grade copper is up big. It's up at 209.55 again. Bonds. Now, this is going to be very interesting. Why? Because I've been discussing that although it looked like there should be one more leg to the upside, the TLT was it had made a new recovery high, and it looked as if it was becoming a little bit tired. The yield has been spectacular as it's come down, that 31-year bear market. Bonds are right now down about a point and a half at 167.24. Crude oil is up $1 at 49.06. And the dollar, this is going to be very interesting. The dollar is at 96. That's Apple. Apple is the same price as the dollar, just about. The dollar is at 93.68, down 66 cents. So here we go. Let's look at the charts. Well, first of all, let me see, now that I've remembered, show you the 10-minute chart. Excuse me. The 10-minute chart shows, look at this chart. You see that resistance area there? Let me just lubricate the vocals. See that black line, the 9-period exponential moving average? See the way we've hugged that line, gone below it, but mostly above it, below it, mostly above it, below it, and then a little bit more below, and then bam, you get the news last night, and the futures just took off, and we've gone up to 2,092.50. Trading right now, 2,089.50, just 3 points lower, but holding that 9-period exponential moving average. So I'm looking at this and I'm saying, in the 10-minute chart of the E-mini, September E-mini, we're looking at 2087. Now look at that. 2087 is the 9-period exponential moving support. The low of the day is 2089.50. Sorry, no, it's not. It's at 2070.25. That's way down there. But the most recent low was the low that was made at 9:30 at 2083. So if you're looking at parameters to watch, a close below 2085.50 suggests that we're going to not only retest that low, but we will finally break that trend line support that's been there since 8 o'clock last night. And what's really important about this, and this is going to be a factor playing out throughout the day, is that a lot of this was missed. In my opening call for subscribers, we've flipped positions. We've actually gone long, took small profits. There were much bigger profits. It's okay. We managed to pick almost the exact top, and we haven't got the exact bottom because of the gap. But I think that we've got a couple of days here going into Wednesday afternoon, maybe Thursday morning, where it could be just like the Fed announcement, where whatever you do, as you get towards the Fed announcement, the price volatility just evaporates and becomes almost a 0% gain, just wiggles around close to unchanged. So what we're looking at here is a rally, and I spent Oh, I'm sorry, subscriber. Actually, I shouldn't say I'm sorry, but I apologize for sending out so many charts over the weekend. I know that it's been mentioned before. I've had people say to me, "Oh, we've noticed that whenever you send out a lot of charts, there's possibly a trend change occurring, and that you like to prepare us for that." That's exactly right. So let me just show you this chart here. I spent a lot of time on this. Where is it? It's this one right here. This particular chart, you see, says, uh-oh. And what does uh-oh mean? It means that back in 2000, when the New York Stock Exchange made its high of 71.64 in September, for some reason, I kept thinking March because that's when the NASDAQ made its all-time high. And then it pulled back. The S&P hit a high in March, but then what happened is it pulled back and it went higher into September. And that was a whole confusing thing. The Dow in January of 2000, the NASDAQ in March of 2000, and the September was the New York Stock Exchange final top. But it is the S&P that did make its high. So this is the New York Stock Exchange. I've labeled that 1. And it made a high, and then it pulls back. And there was a whole discussion in my report, not a discussion, it was a monologue, where I speak about what the MACD and the slow stochastic were doing, what happened at this trough B and that peak A that failed, that vertical line, which just so happens to match number 2, which is the high in October of 2007 at 10,387. And what did we do? We did almost an exact match. See, there's that vertical line. See how the stochastic was already pulling back? Whoops. There's the vertical line. See how the stochastic was already pulling back? And then what happened was there was a single leg A to the upside, which failed, and that was it. And all the technicals failed after that. Uh-oh. But wait a minute. Is this an uh-oh moment? Or is something different here? And I spent a lot of time studying this very closely, and my conclusion was that this time it's different at this. That was Friday's close, and that was a much more positive structure because we look at fractals. Fractals are like those little snowflakes that have the same, and maybe it's a Fibonacci pattern, whatever it is. It's a pattern that could be in all sizes, but it affects and effects everything that pertains to it in terms of patterns. And yet we're looking at a pattern that says, wait a minute, you look very, very much the same. Yes, it's much bigger and it's much longer. So is it different? Well, there were enough factors to say, yes, it was different. And then I added something. I'm going to do it now. I added, maybe I'll find, yeah, I'll do it. No, I'll find the chart. In my opening call, this is what I showed. I sent this out with a long report. And then I sent out this chart, the same chart, and I added one more moving average. And that's the 20-period exponential moving average. Now, you know, I've spent a lot of time talking about moving average. I've given webinars. I've given, in my show, I talk about it all the time. But I think that this 20-period moving average is going to be something of great importance. And this is a monthly chart. And we were above it. So that's very interesting. And now we're a little bit more. So I'll be talking about different things when we get back.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and US dollar denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
For just a real quick thing, I was asked by Jane the Den about Cyber, CYBR. Jay, I'm saying that CyberArk Software Limited at $48.79, up 50 cents. It looks very strong. It wasn't looking that strong earlier on, about 3-4 weeks ago, but now it's much, much better. Nice lift off, a little bit of a head and shoulders in the weekly chart. I would say at 48.79, it's got 49.50s, the left side high back in January, the week of the 22nd, has resistance. Most importantly, if it does have a pullback, it should find a lot of support in the 47, certainly 47.20 to 46.62 is if there is a sudden downturn in the general market, which drags it down. So if you're long, I just stay long. Normally I'd say take a little bit off and you could add it back. I'm not saying anything. I just think it's looking good. I would try to stay in this position as long as possible. And at this particular point, it does look like it wants to go higher. So that's that. Now, the other thing that I want you to do is, had a couple of questions. Actually, one was, so Tom asked, Chapman Wave trend gauge. Did I have a Chapman Wave trend gauge flashing on Friday? No, there wasn't any heads up. This is all news related. But what I was showing in my charts are the monthly charts, both of the Dow and the New York Stock Exchange over the weekend. And I wonder how many charts I sent out. Let me have a look. I could actually check it out because there was a lot. And each one pertained to very, very great specificity, and a couple actually had follow-ups. So here we go. Opening call, Chapman charts. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, maybe 16 by the end of this morning, by 8:35 this morning when I sent out my Traders Corner. And I also discussed gold. Let me just do that now because that's a question that I've had. The GDX. We're actually out of the GDX. We had a small profit. It made a peak E on Friday. I think it's going to do some consolidating. I thought deep and hard about whether I wanted to short, and I still think there's enough potential volatility that we could perhaps get a surprise. Who knows? Coming up this week, when you go by polls and emotional polls, because that poor MP was shot, that young woman, things can be very emotional. I don't think you can correct an emotional occurrence so close to an election in just a few days. So it might take a week. So we could see by maybe Tuesday, setting the poles start to get close again. I don't know. But my thinking here is that we needed a trigger in the general market. Look at this. I'm showing you the chart of the GDX, which is the gold miners. And if you look at it, it's the weekly, the 120-minute chart looks like it needs to test the 200 period moving average at 24.89. It's just done that. It still looks like it needs a little bit further. But if I look at the weekly chart, I would be, and so many times lately we've seen this happening that I'm going to draw it in here. I would normally draw a rectangle, but I think we're looking more at a potential Chapman wave stalk leg formation, oval formation, which says that the GDX, the gold miners ETF, is in a trading band. I'd like to pick it up lower down in the low 24s again, maybe even the 23s if I have a chance. But I thought about it going short, and I don't see any reason right now why I would want to go short gold. Yes, the dollar's having a spectacular move in terms of just a sudden surprise. Spectacular, I mean, in terms of it going from, it's like the Chapman wave Eiffel Tower, straight up, straight down, and that H formation. Who knew it would take just 2 days to get down to the level that it took 5 days to get to on the upside, going from the 93.40s to the 95.32 level on the 16th, and then in boom, 2 days it's down again 93.45. So I'm looking at this and I'm saying the dollars, we'll see, because look at the Great British Pound, BP. Look at this. Fantastic breakout move from lower levels, but not a breakout yet in the weekly. But the weekly will break out if the British Pound continuous contract goes above 147.81. I heard John Logan talking like that. I have always said 1 point, and then you've got these 4 digits. Sometimes you get 5 or 6 digits. It can drive you up. One of the reasons why I stopped trading the futures in the currencies is I have to do the Chapman wave count. I'm busy counting 4, 5, 6, 3, 0.0001. Oh, yep, made. Oh, it was ridiculous. And even if it's automated, by the time you see it, it looks so tiny that it made a peak. Well, I heard him say 147.02. I love that. You put the decimal place in a different area. Everybody who trades the currencies knows exactly what you're talking about. Thank you, John. A lot of information there. Everyone has this thing. I had a chance to listen to Steve Rhodes' webinar from the other night. Fabulous information, and talking about the OUL, the oscillator unchanged line. Just a lot of terrific information. So here we go. We're looking at a declining trend line, right like that, all right? So it's in the resistance area. Maybe this is the big move and now it just stalls waiting. I don't know. But for me, have a look at what I'm really looking at, INDU. This is the Dow. Here's the weekly chart. This is a messy chart. So let me go to something like the S&P. Let me go to the SPY right now. And you look at the SPY and you say, if that's a weekly chart and we made a low at 181.02 back, that's the January low, and we've gone straight up and we're now just consolidating, this pattern, unlike the pattern on the left, when we ran up from the October into the October high, October was it, what was that? The November 11th, week of the 11th high. This one is again pointing to the same sort of pattern. We've got ourselves potential Chapman wave stalk leg formation. Now, the reason why this is important is I'm going to show you. Keep your eye right in this middle one. This is the daily on the left, weekly in the middle, monthly on the right, and in the little corner here, in this little corner we have trading at 209.16 pounds, the SPY. Okay? Now what we're looking at here is, keep your eye. I'm going to try to find it. Was it the GLD? No. Was it the gold contract itself? Aha, the gold track. What did I talk about in the gold contract last week? I said there's a pattern that we talk about in my opening call. It's a pattern that I discovered back in the mid-1980s. 1900s. Can you think we're talking now about the 1900s? Yeah, 1980s. And it's called the Chapman wave stalk leg formation. And what I said is, if this is the leg up, this has got nothing to do with peak A, peak B. This has to do only with the pattern. A strong leg to the upside, made up of many peaks sometimes. In this case, it's 3 peaks to a C. And then the pattern we're looking at goes sideways, but it makes a definitive, not a rectangle formation, but an oval formation. It creates the body of a pattern that I call the Chapman wave stork leg. If you've ever seen a stork standing on one leg, got this thin little spindly leg, and then you've got this rather large body, and you've got the thin neck going up, and then there's a long, long beak. And it's the wind is blowing and the feathers are flying and standing on this one leg and it's not even moving. You say, amazing feat of aerodynamics. Well, what happens is the moment in my work, you go above the oval body high. In this case, for the gold contract, it would be the high of the week of the 5th of May at 1308.30. Even if you go by one tick, in this case, you're trading in increments of 10 cents. I never trade this. Is it 10 cents? Anyway, it's not pennies. And what happens is it pulls back, and then we start another leg up, and I call that the neck with a potential for a head. And that says it should go back and test the oval high, which is done. I'll talk about it when we get back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We'll look at bonds in a moment. We'll look at the XLU and we'll look at Con Edison. That was a request. Just wanted to mention that Larry Pesavento in his show had mentioned that the following contracts will be charged 200% margin effective at the close of business Monday, June the 20th. The changes are being made in response to expected volatility from the Brexit referendum on June the 23rd. It's the British pound, the Euro FX, gold, silver, FTSE index, DAX index, Euro stock, CAC 40, MEFF, IBEX, and MIB industrials. So whenever I see that, and I always see when the futures suddenly it pops up and says the contracts will be, they'll be issuing some kind of a margin rule. I look at that and I always think, that makes it very difficult for a lot of traders. And today we have I think we have more individual traders than ever before. So that says to me that could put a cap on the trading, unless something spectacular happens and things just, take a life of their own. So just on the very short term, let me just say the 10-minute chart right now of the E-mini testing the 9-period moving average. My eye says that it's pretty much, I think it's going to test at some point in the next half hour or so. It's going to test the 2085 area. If it takes that out, then we might have seen the high for the day right there at 10 past 10 at 2092.50. But I'm also thinking that so many people missed out. They're just waiting. And if there is one more burst of energy for the Dow, not to be 218 up and the S&P 25, but if they break today's highs, intraday highs, I think there's going to be forced buying. I just don't see how anyone who's short could risk not covering, to not, unless you're short in a much lower level. And there are many clues that I discussed over the weekend. I labeled them as things that were really, how can I put them? Were little tiny tools, technical tools that I look at that were giving signs of that if there was any upside movement, it could be quite big. One of the only reason really why we wanted to switch positions from short to long, we still have a couple of short positions, that was really quite important. So that's what I want to mention. And then the question I had was MOS, the Mosaic company trading at 27.59. And the question was, would you add to a position right now? And my answer was yes, because the other position was bought nicely. So this is a trading position. You could add now in the 27.50s. I would have a stop under today's low of 27. It's just a trading position. So it's a smallish position. I would add, and the moment, if you do buy it and it breaks above, not above today's high, that's not good enough. It's got to really get to the 27.80, 27.82 area. The minute it touches that, you can start to raise your stop and use it as a trading stop, because if it takes out the high of the 13th of 28.08, that's going to be very positive and suggest that it wants to go even higher to test the high of the 8th of June, which is at 29.46. So yes, I do think so, especially as the dollar right at this moment seems to be a little bit weak. It's interesting that these currency plays have been kind of all over the show lately. So that's what I want to do. Then let's go. So Ed, ED is Duke. I actually remember redoing this just the other day, and I had redone it because I know someone who's had ED, the Consolidated Edison, 77.05 down 79 for a long time. And when we were looking at utilities, I thought, oh, let me just do that. And I don't know where the notation is, but we'll put it right back in here. Here it goes. It takes 1 second. Monthly. This is A, B, C, D, E, F. That happens to be a G. And then it goes A, B, C, and D is what we want in the Chapman wave methodology. Why? Because in the Chapman wave methodology, the pattern that you look for is this pattern right here. See that? You find the lowest, most obvious lowest bar, and you merely count each successively higher peak, and peak D is where you start to say, okay, now other things can happen. Doesn't have to, but that's what you want to look for. And here we are in Consolidated Edison, or made just last week. I think it was all-time highs. Fabulous move. I like it. It's looking very good. Now, the big question is this going to be in the weekly chart? Is this a brand new A? Let me do it from the beginning. You always have to go to the most obvious left side lowest bar. Go back as far as you can get a very good icon of ictus, a low that says, I'm the low. A, B, C, D, E, and that could be an F/A. That's what I'm putting here. Is it a brand new A? That would be amazing. I'm treating it right now as if it's an F. We've got to be a little bit careful. In the weekly chart, monthly chart is still looking great. And let's go to the daily. And the daily says, I bet this is going to be one of those failure patterns. So we've got an A, B, C. You always want to go back. We went back. D, start a brand new move. There's one, there's one. There's one, there's one. Here we go. So daily chart of Consolidated Edison, A, I thought so. It's got to be. It's very much like the TLT. It looks like there needs to be one more move to the upside. Ooh, is that saying that this is a false breakout to the upside? Let me look at it. So consolidated Edison ED holding very well. Where would I get interested in it? Because it has a spectacular move. Because the dividend play as well. It's at 77.01. I'd probably say 75.76 to 74.80. I'd like it not to go below 74.50. I hope it's listening to me, and I like it's listening to me. So I'd like at that point somewhere in there. But if it makes a leg D after that, I'm going to have to hold off buying it. So it's a 70. If it goes above 78.40, it starts leg D. If it pulls back first, it could go above D, above C to make D and go still to an E. But in the meantime, it's looking very strong. If you're in it, I'd stay in it, but I'd start being a little bit cautious. In fact, I'm not even sure yet whether I want to add to it for just one quick pop of 2 points. Maybe yes, maybe no. But in the meantime, how this weekly chart acts, because if the week closes, this weekly bar closes under 75, right underneath the 9-period moving average of 75.54, you've got to be careful, at least for the short term. So look at this. This is the TLT. Now I can look at the TLT. And that's made an alternate count. I'm calling it F/C right for this moment. Let's just call it an alternate count F/C. If I was thinking of shorting, going to the TBT, this is what I'd be looking for right now. The weekly chart has got a leg D in place. This is a peak D, if no new high in the TLT, the Lehman 20-year T-bond fund. If this week you don't go above 137.56, not you, the TLT, okay? Now, there's another question I really do want to get to. My eye says that at some point, the TLT wants to go above 138.50. That's the Japanization of our bond yield. So I still think that there's going to be enough negative material out there for the Fed to say, you know what, not yet. So this move down, if there's another move down tomorrow and the TLT starts to go into under 133, I have to consider that was a peak F, that we've made a weekly top, and we've got to go from there to say, double top potential, 138.50 was the high back in 2014, and 137.56, just $1 lower, less than $1 lower, has been this potential double top. But I'm thinking there will still be higher highs to come. That's number one. Number two is, in relation to that, so ED, that's Consolidated Edison. I've gone through that analysis. Let's go to the same thing. We're talking rate interest sensitive areas. The XLU has a peak D, a little double top, but it's holding pretty well. G/C in the weekly, G/C in the monthly. Oh, this is going to be worth my while. Taking a little time during the break. Basil Chapman, Dow's up 226, held that 9-period moving average in the 10-minute look so far. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
So yeah, we're looking at the IYR, which is at 80.32, the iShares US REITs ETF. These are commercial properties. I believe that it recycled and that this is leg C. See, I've got the TLT leg C. And maybe it's an alternate count. This could also be an alternate count. Everything about it is quite strong. I'm looking at it and I'm saying leg C. I mean, this is almost like looking at the gold chart in the sense that, do I want to short? And I'm saying, not just yet. I don't think it's ready. So I like the IYR. If you're in it, the question is, should I start exiting my trades? And I'm going to just say that it's holding very well in every time frame. The weekly chart is very strong. Stochastic still above 83%, but much lower than it was before. It is in leg D. I would say, let's do it again tomorrow. Ask me the same question tomorrow. Let's close the day. Let's see if the Dow's up 222. If it closes up only 150 or 130, it says, oh, that was just an emotional response. If it stays here and actually goes even higher, that's just going to... Can you imagine if you're short from Friday and you saw this happening and you're in one of those leverage products and you now can't get out because you're saying, oh man, was it just a trade? And now that small loss is a big loss and it's got to come in my favor. And then it goes against you a little bit more. You are really messed up. I mean, psychologically, it's very difficult to come back from that. You've got to have your stops in. Take your best stop is your first stop. Remember, that's the expression. I think it's a great expression. So IYR still looking good. I don't want to be fighting it. I like the way it's acting. Now, what is interesting, for instance, here, let's look at Verizon. Yeah, Verizon's just gone straight up. It's in leg C. Very nice move. Telephone, also dividend stock. Just for disclosure purposes, we are long from way down below. This is gone. It had a reversal day. It's got a very interesting candle. So far, it's Chapman wave Roman candle. A lot of implications there, but the day's young. But this is leg C. I'm calling it leg C rather than G in the weekly chart. So I wanted to look at it because what kind of dividend stocks are in play? The IYR, in a sense, could be thought of as dividend stocks as well as capital gains, etc. But telephone is extended right here. I would expect a pullback. I told subscribers expect some kind of a pullback. At any point, we can go to the 40.31 to the 39.50 area. No big deal. Just could do that very quickly. So how this is all playing out is going to be very important. Now, one other question I had was, let me just refresh this, because someone had asked me if I would just have a quick look at oil, because I said that oil could go down just a little further than I thought. I said 45s would be the area that it could go down to. It went a tad lower than I was expecting on that move from the USO peak F. It went down, that went down to the 11 something area, 11. So, and now there's been a very good spring back, but this is only peak C in the weekly. Whereas if you go to crude oil, and that was really kind of my benchmark, that had gone to a D. And what I'd said when we were looking at it last week when it was trading at about 47.81, I said, you know what, this is probably going to go down a little bit more. I still wouldn't be short crude oil at this particular point, but let's see how it holds. And I think I'd spoken about this moving average right here, which is the 200 period simple moving average of 46.55. Lo and behold, it goes to 45.83 and trading right now at 49.84. Sorry, 90. Someone must have fallen out of their chair. 49.84. It's looking quite good. Monthly chart still needs a lot of work. But don't forget, I had that beautiful trend line that it held. Look at that trend line. It's stuck under it. Hasn't closed, and it's just closed on it, but not under it yet. So crude oil continuous contract says that, yeah, it's holding pretty darn nicely. Okay, and if you want, you can look at this right here. You remember the SPY and the USO 5-minute chart? What have we got? We've got the SPY going peak A, B, C, D, E, F into today. That's excluding overnight. This is just the daytime hours. So this is pulling back. The SPY is now at 209.54, having hit a high of 209.61. And the crude oil, the USO, is actually going higher. So that might, a little later on in the day, might turn out to be a positive for the market. Okay. Now there are a couple of things I want to talk about. The volatility index. You know, that's one of the things I spend a great deal of time on, the VIX index. I didn't send out a VIX chart this weekend, even though I did some work on it, because it was just, there was so much going on. But I discussed it, and I said that if the VIX starts to fall under 18 into the 17s or lower, that's buying pressure on the market. And lo and behold, we're at 16.9. We're actually a tad under the 200 moving average with an island reversal. Yeah, that doesn't count that much in the VIX index, but it is an island reversal. And that means that you've got your 5 days of trading up there and then a big gap going back to the mainland, which is this area right here. So the leg C is probably going to make a peak C this week, unless on Friday there's just a spectacular sell-off and a major thrust to the upside. So now let me just do this, get rid of the phone call there, okay. So the VIX index is saying to me, we're actually long the VIX, we're not short the VIX, we're long the VIX. It's saying to me that there is enough potential for the volatility index to pull back into the low 16s, the 15s, that it gives a little bit of comfort to the market at this point to try to hold at these levels between maybe 190, 185 support over the next few hours into tomorrow. If it breaks that, that's something else. But if it actually holds and has a bounce into the close, this volatility index will close for the first time since the 10th of June. It'll be the first time it's closed under the 200 period, that coral color moving average right there. Okay, and the week, no, you're talking about the week, we've got a whole week to go, but it is underneath the high that was made of 22.89. All right, so that's the VIX index. Now here's the thing, we're already at only up 195. The S&P's up 22. Day's young, lunch hour, a little quiet time. Let's see what happens. So a couple of questions here. That's not the question, this is the question. Chart just showed and possibly new. So does that mean we are now equivalent to 2009 July? Hey, that's a great question. That's the question that I was dealing with earlier on. So, and now, okay, great. What I'm looking at here is within the context of that New York Stock Exchange chart that I was looking at. I'm not going to go through everything I did for subscribers. It was in great detail, but I basically said, look at this chart, even though it's a peak E, which could be renamed if we had to go higher than the 10,648 high of the week of the 10th, 3 weeks ago. This is excellent action. Let me make this even bigger. Look, that we never saw that in the weekly chart, even when you had that big rally that failed back in last year, November, when we went from the August the 24th low. It came back down. This is held very nicely, hugging the 9-period moving average. So I like what I'm seeing. All I'm saying is I don't know what's going to happen with Brexit. I don't know what's going to happen Brexit. I don't know what's going to happen with the Fed talking this week. All I can say is this is darn good action in the New York Stock Exchange. It's way under the 11,254 all-time high. It's at 10,496. But so far, it's holding very well. I'll be back. Basil Chapman. Dow's up 196. S&P's up 22. I'll be right back for the final segment.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
A couple of the questions I had in the den. S&P wants to know about the GDX. I did it a little earlier, but I'm going to do it again because it's really worth it. It's now trading at 25.58. I said that we were stopped out pre-market, but for those of you, let me just double check here because I don't want to do anything out of turn. Yeah, it was. So we were stopped out for a small gain, but I think it's going to be pulling back a little bit. It's consolidating. Here's what I'm looking at. You see, this is the gold miners ETF, the Van Eck Vectors. This is the first time we've gotten to the 200-period exponential moving average since it broke down back in the week of the 16th. I couldn't believe it. 16th of November in 2012. This is the first time over the last two months or so. It's the first time it's gotten back to that 200-period moving average. And usually what happens, you get there, and there's a consolidation. It takes a little while. It can even form a Chapman wave oval formation, but it messes around. It just doesn't break out because it takes so much time to get there. It's like it touches it and it says, I'm here. Whew, now I can take a breather. And that's really what it's doing. But if on Friday, because of Brexit, whatever happens, let's just say gold is favored now because it's really bad news for the market. I wouldn't be surprised if the British pound tests that recent low, and all of a sudden you're looking at gold being the favored object, and the GLD will see the miners explode, and you can go from 25.61 to 30 in a snap within an eye blink. So I'm a little sorry now that we're out of it. I really wanted this more as an intermediate term trade, but my thinking was that if the dollar did hold its rally over the next few days, that I didn't know how the gold miners would hold up. I could do the analysis on gold, but to do all the different gold miners, see which one is weighted highest and all that, I just didn't do that. So in a sense, I'm looking back and say, you had this plan back earlier on. Why didn't you, with the GDX, just say, let's stay in this position. We got it quite nicely at a decent price. Let's rather just add to it. We can add it 2 or 3 times because I think gold is in play and the gold miners are in play in this phase. So I apologize to subscribers. We didn't lose any money. We made a little bit, but that wasn't the point. The point was that I think looking now at my thinking, it's trying to analyze my thinking, original thinking, I should have typed that right in, that this was more an intermediate term play, just like we had one of the commodity indexes, which has also bounced quite nicely, kind of back where we were and sold it. So it's a mistake. I think in this area, I've got to look at it as adding to and not subtracting. So let's just get that out the way. So I'm thinking that 24.53 could be an area that it tests over the next week, next few days, I'm saying. We'll see what happens. Maybe I've just missed it. We can't get back in, at least in this phase. So we're about to break, and you're about to go to your Think or Swim swimming lesson. And then you go programming all day through. We had a fabulous program earlier on. I have to thank all our hosts for just giving me a great lead-in for my show. It really helps. And, of course, I hope I've done that for the Think or Swim folks. Now, let's just do this real quickly. The volatility index is trading at 17.20. It's down 2.21. If by the end of the day it's trading near 17.90s or 18, and the market has given back these gains, is only up 133, and the S&P is only up 16, I'm saying to myself, maybe that was a trap with me being caught. But that's not bad because we have some long positions that are working out very well, and we have some short positions. So the story is just do what you see, trade what you see, and also have stops in place and think it through. I didn't think one of them through carefully enough. Always think through your plan. And I'll see you tomorrow. Don't forget my opening call. Check it out. A lot of information and charts that are relevant to everything we're looking at were shown over the weekend. I'll be back tomorrow. Have a wonderful day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.